Good morning, students. Welcome. We completed Unit 1 with the 35 or 36 videos. Unit 1 is basics and building blocks of accountancy, which we have to remember. The rules explained in Unit 1, either accounting equation or types of accounts, rules of accounts, are very primary concepts which we have to understand throughout our life for accounting or bookkeeping. So, in continuation to the journal entries, ledger accounts, then there is another step is called as a subsidiary books. So, usual practice which we discussed in Unit 1 is transactions were written in form of journal entries. Journal entries were posted into separate ledger accounts. Ledger account balances are posted in trial balance. Trial balance will tally or have to tally. From trial balance, we prepare final accounts, that is trading, profit and loss account, and balance sheet. Many times we discussed the same process. So, present organizations, volume is increased, volume is increased. So, everyday transactions are increasing. So, there are orders. Amazon is having the orders more than 4 lakhs or 5 lakhs in a day. And there are company sales are more numbers, either cash transactions or credit transactions. So with this more number of transactions, passing journal entries to all the transactions and posting them into ledger accounts and balancing them will be tedious job. That's why a separate books were kept for maintaining the similar types of transactions. Suppose credit sales book, credit sales book, credit purchases book, and sales return book, purchase returns book. And for credit sales, if we accepted the bills receivable book, credit purchases, bills payable book, like that. So, and all the transactions were directly posted in that book. Summary of the books were transferred to trial balance. In addition to that, which were not covered in those books will be written in journal, separate book for few journal entries which were not covered under cash, credit sales, credit purchases, sales returns, purchase returns, bills books. Okay. Now, what exactly the meaning of subsidiary books? Subsidiary books are primary records. Primary records. A book is also called as the primary book or book of original entry. Instead of day book, all credit sales we recorded in this subsidiary book called as a sales book. Cash sales, cash purchases were written in purchases book. Okay. So subsidiary books are the books of original entry or primary records of journal entries or the transactions which are made in subsidiary books. On the basis of the subsidiary books, postings are made into concerned accounting account afterwards. A separate sales account is opened. Sales book account is transferred to sales account to trial. So here we are segregating or consolidating all the transactions which are related to a particular type of transaction. And simple to understand, purchases. Advantages. Posting of each entry becomes easy. Very simple. We were jumped into transaction to direct ledger account. Sales book will be opened directly. Credit sales will be posted in sales book. So directly we are posting. One type of transactions are recorded in one book, so it becomes convenient to locate any desired transaction. If any problem is arised, any totaling problem is arised, then simply we will look at the particular book. All the transactions are available in that particular book. Very simple is sales book, purchase book, cash book, like that. Important descriptions about the transaction is also made in the related books. So a lot of information related to the transaction is easily accessible. Okay. When we are preparing sales book, we can understand how the descriptions we are giving. All the credit sales we are recording in the name of the party with the descriptions of products, quantity, and per unit price. And also we mention about the discount that will be shown in sales book. Okay. So descriptions about the transactions is also made in the related books. So a lot of information related to the transaction is easily accessible. And disadvantages may be, we have to open a separate book. Nowadays it is not expensive because all the companies are maintaining computerized accounting. Just we are at the level of entering the transaction in the form of journal entry. Remaining work was done by the computer. So it is not expensive. It is expensive in case of physical maintenance of books, but it is not at all expensive if it is maintained electronically or digitally. It requires some basic knowledge of accountancy, as if any of the entries are recorded incorrect, then it will be a problem or they need to be rectified. So purchases are, number one, goods purchase, another one is assets purchase. When we are thinking about purchases, they are comes under purchases only. Goods purchased as well as assets purchased. But a rule is specified for the purchase account. In purchases book, only credit purchases has to be recorded, and assets purchases are not recorded in purchases book. So this rule can be understood by the people, those who are having the knowledge of accounting. Other people doesn't remember, and they may by mistake they will enter the purchase of machinery in purchases book, which may be incorrect. Okay, so a specific knowledge is required to maintain these type of books. Right. Subsidiary books types. One is purchase book, sales book, cash book of 4 types: single column, double column, 3 column, petty cash book, purchase returns book, sales returns book, bills receivable book, bills payable. Okay. The company's transactions which are related to credit purchases, directly we enter in credit purchase. The transactions of a company which are related to credit sales, we will directly enter into sales book. All cash transactions we posted in cash book with bank column also. Purchase return book, purchase returns are entered in purchase book, sales returns are entered in sales return book. Any bills receivable or bills payable, they had separate books for entry. Okay, right. Now we understand purchase book. This book is used to record goods purchased on credit. I'm repeating once again. Purchase book is used to record goods purchased on credit. Cash purchase in cash book, asset purchase also in cash book. Okay, even the assets were purchased on credit, that will go to journal property. You have to remember, in purchase book, goods purchased on credit were recorded, and also known as invoice book, bought book, or purchased journal. This is called with the similar names: invoice book, bought book, or purchased journal. It is not necessary to record the transactions in the journal book where they are entered in the purchases. So a separate day book is not required. Directly we entered the credit purchases in purchases book. Okay, look at the format of purchases book: date, particulars, invoice number, ledger folio number, and the total of the purchases book at the end of the month will be transferred to purchases account. The balance of purchase account, summary of purchase account will be transferred to trial balance. Okay, purchases book. Only credit sales are recorded in purchases book. Purchase book is also called as invoice book, bought book, or purchase journal, and it is not necessary to record the transactions in the journal book where they are entered in the purchase. Two times is not required, either in day book and purchase book. Directly we can record the credit purchase in purchase book. The format of purchase book consists of date, particulars, invoice number, LF, and okay. Then the next we'll understand sales book. Sales book is used to record credit sales or goods sold on credit. Purchase book is used to record goods purchased on credit. In same manner, sales book is used to record goods sold on credit. The record in sales book is made from the outward invoice book, which contains the exact copy of each invoice sent out to the customers. When we sold goods, we send a record or invoice, outward invoice. Outward invoice is evidence of credit sales, which we use to record the sales in the sales journal. Same format for the sales book also. Outward, here we are mentioning outward invoice. Okay, sales book format. In the sales book, we enter only goods sold on credit. We can't enter cash sales. We cannot enter good sale of assets. Sale of assets. Then coming to the purchase return book. Purchase return book. So purchase are recorded in purchase book, credits book. Credit purchase are recorded in purchase book. In same manner, we record the purchase returns in separate book. It is called as return outward book. While returning the goods, buyer prepare debit. So the whatever that purchase returns are the written outwards are the debit notes. Debit note is also same, similar. All are treated as purchase return books or purchase returns. A separate book. Format, same format for the purchases book and purchase return book. But the posting of the entry will be quite different. Okay. Then coming to the sales returns book. Sales returns book. It is a book used for recording goods returned by the buyer or the customer. Okay. Goods were sold. We sold goods to customers. Customers found defective. Then they will return goods to us. That's why those are called as written inwards or credit note. We prepare written, keeping the record in sales return books. Sellers prepares a credit note. we prepare a credit note. That credit note indicates all sales returns. Okay. So sales returns written in words or credit note, which are similar to understand sales returns. Format is same. Sales return book format is date, particular CLF number, credit note number or credit note reference number, and the amount. Okay, right. So now, till now, we understood four books. One is a purchases book, another one is purchases book. We record only credit purchases. This is also known as invoice book, bought book, or purchase journal. It is not necessary to record the transactions in journal book as well as purchases book. Directly we can enter into purchase book. The format of purchase book is a date, particular invoice number, LF number, and amount. Only goods sold on credit were recorded in sales book, and there is no need to record credit sales in journal as well as later in sales book. Directly we can enter the credit sales in sales book with party name and description of goods. Format is date, particulars, outward invoice, LF number, and so purchase return book is maintained to record the written outwards or debit note particulars that is used for entering the purchase returns. Same format for as purchases. And coming to the sales return book, it is called as written inwards. The customers who bought goods from us on credit basis or return goods to us, and those returns are called as written inwards. Written inwards. Written inwards were recorded in sales returns book. Okay, format is same. Then coming to the cash book, very important. Cash book is to record the cash transactions. Separate book is kept, which is called as a cash book. You find in some organizations or some physically you can verify a bound volume with the columns. Bank cash columns are there. Usually they will maintain this cash book. Okay. Cash book is used to record all cash transactions. The function of cash book is to keep records of all cash transactions. The function of cash book is to keep all records of cash transactions. Cash book takes the place of cash account. That is not necessary to open separate cash account in the ledger after keeping record in the cash book. Earlier practice is journal entries, ledger accounts. When we open the cash book, directly the transactions which are related to cash were posted into cash book. Cash book is a journal as well as a ledger. Directly it is treated as a ledger account. Okay, simple cash book which we prepared earlier, double column cash book with discount column, triple column cash book with bank discount cash columns. Petty cash book is used for maintaining the small payments, which is used for running the office. Okay, so these are the subsidiary books except bills receivable and bills payable. Okay, so how many subsidiary books are there? One is a purchase book, another one is sales book, purchase returns, sales returns, bills receivable, bills payable, journal proper. How many are there? Cash book also. Purchase book, sales book, purchase return book, sales return book, bills receivable book, bills payable book, cash book, as well as a journal proper. Journal proper. Okay. 1, 2, 3, 8 are there. Bills receivable book, bills payable book are the books which were cash book will learn later. Now with examples we will learn. Right. Bills receivable book is used to record the bills received from the debtors. While a bill is received, details of it are recorded in the bills receivable book. Whatever we sold goods to customers. Customers, instead of paying the cash, they will accept a bill. That bill for us is called as a bills receivable. That bills receivable is recorded in bills receivable book with the details. In the ledger of the account of the person from whom each bill is received is credited with the amount of that bill, and the periodical total of the book is posted to the debit of the bills receivable book. Okay, if the bill received from Raju, bills receivable to Raju account. Raju account is credited with the bill detail. That total will be transferred to bills receivable book to debit of the bills receivable book. Same as credit format. Look at the format. Date from whom received Raju, term 4 months. Okay, due date, then ledger folio number and similar way, bills payable book is used to record bills accepted by us. We bought goods on credit, raw materials on credit from the parties, and that for that instead of the payment, we will we accept the bills. So that details we enter in the record of the creditor, and that total will be entered in the bills payable ledger. Okay, format of the bills payable ledger. In next video, along with subsidiary books, we understand types of cash books and how to prepare those. Okay, students, bye.